Hello, and welcome back to the Macro Gamer channel. My name is Mark Hassingham, and today we're going to get into our weekly numbers. As of today, it's Saturday, November 2nd, week number 15. So let's get into the numbers. So as of today, pardon me, the portfolio's net worth is $227.11. This is as of November 2nd, which is today. We have our portfolio weekly data. You see on the lower right, we're down 0.15%. As we get closer into this election next week, it seems like we're getting a little more volatile and assets are selling off. We have a market loss of 60 cents. And again, this is from October 28th to November 2nd. So it's the 1 week weekly chart. We have our monthly data. We're up 0.77%, and remember this large spike here is our $30 cash deposit. You see the net cash flow right here. This is on October 16th, so it's just cash into our account. Our performance is in the lower right, the 0.77%. We have a market gain of $1.60 and a dividend of 13 cents, and this is from October 2nd to November 2nd. And as of pardon me, as of last week, we began receiving our quarterly data now. So that means we've done 3 months or more now since this portfolio started back in July. So now we can look at a 3-month chart, and you see all these little stair steps. This is our net cash flow. This is every time we put in cash. So every time we see a stair step like this, it's $30 cash deposited into the account. But our actual performance is right here, the money weighted rate of return. It's up 4.54%. So over a 3-month period, we have a market gain of $6.98 and a dividend of 81 cents. And this is the period of from August 2nd to November 2nd, so 3 months. So 4.5% gain in 3 months. That's our portfolio quarterly return. So each week you'll see now the three data sets: weekly, monthly, and quarterly. Now we have our weekly percentages. You see gold still at 30%. Government, we had brought it down to 20%. Remember, we had the turnaround in bonds after the weekly job numbers, which actually now the most recent ones that came out are horrible. But at the time when these came out, my bond position reversed pretty hard, so I reduced it down to 20%. Our US dollar at 15%. Our commodities at 15%. And remember, last week we changed we increased our stock position, our equal weight, to 15%, and of course that's when the stock market turned around. Of course I picked the worst time to do it. And then our Bitcoin position is still at 5%. So our gold position is down 0.34% for the week for a loss of 23 cents. Our bond position is down 0.55% for a loss of 25 cents. Our dollar position is up 15.15% for a market gain of 5 cents. Our commodities position is flat. Our equal weight S&P 500 index is down 0.95% for a loss of 32 cents. So of course, like I said, I picked bad timing. And our IBIT is up 3.58% for a market gain of 40 cents. So that's our weekly percentages. Our monthly percentages, gold is up. I'm just noticing now this USCI, there we go, it's being flat. I don't know if that's a data issue or it's flat. Gold is up 2.8% for a market gain of $1.78. Government bonds down 3.37% for a market loss of $1.72. So again, this is why we're reducing it. I may reduce it more, we'll see. Maybe I'll put it in dollars. Our dollar position is up 3.45% for a market gain of $1.09. Commodities flat. Stocks down 2.32% for a market loss of 61 cents, and Bitcoin up 11.2% for a market gain of $1.09. So this is our monthly percentages. Now again, our quarterly percentage we get to see now. So gold over a 3-month period up 11.84% for a market gain of $5.66. Government bonds down 2.26% for a market loss of 99 cents. Our dollar up 2.39% for a market gain of 64 cents. Commodities up 2.41% for a market gain of 48 cents. our equal weight stock index up 1.06% for market gain of 16 cents. And our Bitcoin, or IBIT, up 19%, 19.04% for a gain of $1.65. So out of all these, gold and Bitcoin have done quite well. The other ones have been kind of hit or miss. We've had no portfolio transactions this week. Our Illuvium staking for week 15 is our dashboard. So the current price today is about $33.07. We have a 4.23 IOV staked in the protocol. Our market value for that is $139.79. And we have no new revenue distribution this week. And we have our previous claims, which have equaled 0.012 IOV for a current market value of 40 cents. So that's 2 payments we've received so far since July, like the end of July when we started this. We have our vesting. So we have the 4 different times we staked our ILV token. So the very first one we spent about $100 at the time, which was July 27th. The second time a month later, 0.79 ILV for August 24th. And then a month after that, another $40. We had $1.01 ILV on September 25th. And a month after that, most recently, 1.11 ILV. I spent $40 there. We staked it on October 25th. So we have 4 stakes now. So every month I'll do one. I'll add one basically for like $40. I try to make the deposit value per month relatively the same for both the stock market portfolio and the Illuvium staking portfolio. So it's roughly $50 in each account. So these are our 4 vesting. And as I said, our revenue distribution is at 0. So we have not received one revenue distribution this week. And we've had no transactions for Illuvium right now. And that is it for our weekly numbers. So now we go to our charts. As always, starting with our best asset, which is gold, still in this phenomenal uptrend. Hasn't stopped, not slowing down. If anything, it's breaking out of this trend. It looks like it's starting to pull back just a tiny bit. If I zoom in on that, you see it came up and then it dropped down, but it's still above our trend line here. So it's still kind of above the bullish trend. But even if it comes back down, it's still going to be in this bullish trend. It's got to come down and then break through here. It's got to break through this bottom green line to kind of be like this, but then keep going down. But so far it hasn't. Inflation has been a monster in this economy, so gold does quite well in an inflationary environment. Until that turns around, there's no reason not to sell gold. I say it every week. I've been saying it every week, pretty much since I started this channel. This gold's just been doing so well. There's no reason to sell gold. We started it, here we go, let's see, July, right around here. We started right around here. And it's been doing good up ever since. So gold's our best performing asset by far. Government bonds, as you can see, we were going up good for a little while, and then we had this sharp turnaround, and it's still coming down, and now it's testing this bearish line right here, this red line. It already broke through the bullish line. Now it's testing the bearish line. Now, interestingly enough, the job numbers, look at it real quick. When I talked about how this position turned around when the numbers were really high, well, they keep getting revised down. So if we look at the non-farm payrolls here, zoom in, there we go. Look at, we're down to 12K jobs now. This is pathetically sad. We're getting so close to 0, it's fucking scary. Like, where's the 0 line? Let's see. It's like right there. We're like right above the 0 line. We're dangerously close to negative job creation. We're dangerously close. And when we get there, that's very recessionary. That's bad. But you see this large spike right around here? This is what killed my bond position. But of course, every month these jobs are getting revised. I think this number already got revised down. But then this number that came out is just abysmal. 12,000 jobs. Couldn't even crack 6 figures. 12,000 jobs. We're so close to 0 job creation. It's crazy. If this goes on for a few more months, if this trend doesn't stop, we will be a negative job creation, which is going to be very bad. But this is why my bond position got crushed. But now I feel like it should turn around, but I don't know. We're going to see what happens. We'll see what the market says. But for right now, I've reduced my position. I think if this breaks down more, I'm gonna have to give up more. I would likely go to the next asset, maybe put in the dollar, because the dollar is breaking out of this bearish pattern and it's coming up to this bullish pattern. So if it breaks above this green line, you know, it's a strong dollar environment. It's already pretty strong, going from right here, October 1st, all the way to November 1st. This is a full month right here. This trend right here is a full month just of a strong trend upward. So I have it at 15% now. I might increase it to 20 and reduce my bond position from 20 to 15. So I don't know yet, because the dollar is not a long-term investment in my opinion. It's more of a strategic investment. So whenever there's volatility in the market, you're concerned about things going bad, it's a good time to invest in the dollar, which of course looks like right now. But long term, I'm not going to have a high weighting in the dollar position. I would have a higher weighting in like stocks or something for the long term, because over the long term, stocks go up, I think roughly like 5 to 7% a year. So you get good compounded returns off that. You don't get that kind of performance with the dollar. If you look at it on a long-term chart, like if you go back to the 14th, 2014, and up, it's done pretty good actually, the UUP. But long-term though, it's not going to get the same return as the stock market. But we'll see about, also if this continues down and the dollar keeps continuing up, I might have to change it. But of course, by the time I do that, it'll flip again. Watch, guaranteed. Now, go to commodities. So this trend in commodities, our USCI has been going on about 2 years. It's been this uptrend. Right now it's kind of flat right here in the middle. We're watching, it's going kind of sideways. So long as inflation keeps coming up, I think this this commodities position is going to keep coming up. I think over the long term, into next year probably, at the very least into next year, I think we're still going to have inflation. I don't think there's going to be a turnaround quite yet. It just depends on, it also depends on what the fiscal policy is going to be with the next president. So we're going to have to see. Both candidates seem like they want to spend a lot of money, so I don't see why inflation wouldn't keep going up if that's the case. Anytime they make new plans, they reduce, or I should say they increase spending and all that, like it's just going to drive inflation higher, which means these commodities are going to go higher. So I don't see a reason to decrease. If it really keeps going, I could debate whether I increase 5%. If I take 5% away from bonds, I could either increase 5% to the dollar position or 5% to my commodities position. So at the very least, like I said, this has been holding a 2-year trend pretty good. So coming up, going back here, July 22 all the way to November 24. So it's been doing pretty good. So I could put it in either one. We'll see. But I'm thinking more of the dollar right now because of the volatility going into the election. But post-election, you know, who knows. Next are my fucking worst trade so far, definitely. So right around here, I just FOMO'd into my stock index. I increased it by 5%. Remember, it was 10% for a long time, pretty much since I started this portfolio. My equal weight S&P 500 index was at 10%. I increased it to 15% because I was just constantly talking about how I didn't miss, but like I should have increased my allocation more to this trend, like over a year long. It would have been a great increase to my portfolio. But I was bearish on the economy overall, so I didn't see the point of it. But then, of course, right around here, I decided, all right, enough is enough. I'm going to do it. And then, of course, it starts coming down, and now we're testing this green line, this lower bearish line. Now, we did it here in August. We tested that green line and came back. We tested it here in September and it came back. So I'm hoping it's going to do the same thing. We're going to see. I think all because the election coming up, it's like everyone's a little skeptical, a little scared. So they're probably going to pull back. If it drops sharply, then I'm going to have to pull out quickly, but we're going to have to see. But next week will be the defining week for sure. And then we have our Bitcoin. Now, Bitcoin's been interesting because we're seeing a bit of a trend reversal here. It's coming out of this trend. Now, if we go back to our all-time high, we barely tapped it. And then came down. Right? As soon as we tapped it, Bitcoin got scared and it came down, or the hodlers got scared and it came down. So I don't know if it's going to reverse or it's going to continue. So we're still kind of at that phase where we're trying to see what happens. It's too short of a trend, and Bitcoin's far too volatile for me to just dive into it. I don't want to increase it by like 10% or to 10%, and then this trend just reverses hard, then I lose a lot of money. So I would want to see it go, See where we're in November, December, maybe going into December. We'll see, like, if it's going to do good or not. But at the very least, it's good to see this trend reverse. It's interesting though, as bonds are coming down, right here, as bonds are coming down, Bitcoin's kind of reversing a little bit. Normally those two will kind of go together a little bit, although this has been going down for several months while stocks have been going up for several months. But to see it kind of break out like this is interesting. And this is off the hype cycle right here. So this was the Bitcoin ETF hype right here back in early January, February, March, and then it died off, and then now it's starting to come back up again. So we're going to see where it goes from there. But next week's going to be an interesting week. It's going to be a very interesting week, obviously. The whole world's going to be watching. I don't care, because I'm going to keep investing. That's the whole point of this. Like, it doesn't matter who's president. It doesn't matter which party. It doesn't matter. Literally doesn't matter. Like, going to keep investing, trying to build my wealth, trying to grow my portfolio. The whole reason why I show this portfolio to you all is so you can all kind of see a more active, an actively managed portfolio. People online will like talk about what they do with their investments, but none of them like show like how they're moving their money and everything. So that's what I kind of want to do with this. I want to show how I'm moving the money, so good or bad. So if I have up weeks or down weeks, up months or down months, you know, like I'm showing it in this every single week. So next week, since I was down this week, was it 0.7% or something like that? Yeah, 0.15, a lot less. I was down 0.15%. So next week, going into the election, you know, it's going to be volatile like a motherfucker probably. So I'll probably definitely be down next week. Otherwise, unless the reverse happens and then like it's bullish for the market, I don't know. We'll see. But the next week after that, the next week after that, the next week after that, I'm just going to keep doing the same things, keep showing these videos. It's not going to change my opinion who the president is, doesn't matter. I'm just going to keep investing and making these videos, and hopefully you all can benefit. If there's something you can learn from it, that'd be great. If you have any questions, comments, or criticisms, let me know. And as always, thank you for watching. Thank you for supporting me. Thank you for continuing to follow, and have a good day.